This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
Good morning. I'm Gord Long with GordonTLong.com. As part of our ongoing series on financial repression, I have Egon von Greyerz joining us once again, this time though from Zurich, a former banker, former corporate vice chairman of a FTSE 100 corporation, and founder and managing partner of the Matterhorn Asset Management Group and Gold Switzerland. Welcome back, Egon.
Thank you very much, Gordon. A pleasure to be back, and good afternoon to you here from Switzerland, Zurich.
Egon, we have so many new listeners joining us that may not be familiar with your background. Can you just give us a quick thumbnail of what you're involved with and things that you've done in the past?
Yes, well, I think you actually mentioned what I have done. I have a long career behind me, and which involves, as you said, banking, corporate life, and corporate finance, and then investment activities. And what I'm doing now for about 15 years is Matterhorn Asset Management, which is a company based in Zurich, which specializes in wealth preservation. And we're very much into physical gold stored outside the banking system, and we have a separate division for that called Gold Switzerland, because we believe that the world will have problems in the next few years, and we believe that preserving part of your wealth or most of your wealth is going to be absolutely essential, because there will be a massive wealth destruction in coming years.
Well, in all of the interviews that we've been having on financial repression, clearly the theme that has come through is wealth preservation and how to maintain that. So it's very, very appropriate. What we want to talk about today is the fallout from the Swiss gold referendum and the other items that was in the referendum, and your feelings on it, what we've learned from it, and the consequences. But Egon, just as I was shocked, maybe not that it was not passed through, but passed, but 77%. That's just, to me, was overwhelming. That was opposed to it, and frankly, the only time I see that kind of lopsided victory, at least in the United States, is when one side absolutely had no campaign contributions and media coverage. Am I wrong on that, or is that part of the problem here?
No, I agree with you. It was a surprise, and all opinion polls that were out before the referendum showed that it was fairly even between the yes and no.
Exactly.
The first one, the yes was leading by a few percentage points, and the second one, they were behind by a few points. So that was very surprising. And we knew, of course, that major sectors of the country were against us. First, the government and the central bank, and the Swiss National Bank actually campaigned against us on an active basis and on a daily basis in the media and on television. And of course, for these private referendums, the rule, the unwritten rule, is that the government should not campaign against you. But the Swiss National Bank was desperate to beat the referendum, because they would have had major problems with their balance sheet, and with a massively inflated balance sheet and the massive currency position that they're running there, which is 80% of Swiss GDP. I mean, they have about a balance sheet of 500 billion Swiss francs, and they have a short Swiss franc, long euro currency position of 470 billion Swiss francs. And that is, of course, to maintain the peg between the euro and the Swiss franc at 120, because the Swiss National Bank today, as against in the previous 50 years or so, believe that they should intervene, manage, or as we would call it, manipulate financial markets and the Swiss franc. What is interesting is that Switzerland has for a very long time prospered by having a strong currency, strong growth, and low inflation. For some reason, they believe, like every other country in the world, that they have to join the race to the bottom and therefore push the Swiss franc down and print more Swiss francs than they've ever done in the past in order to buy foreign currencies, especially euros. So sadly, they're now led by the central banking principles of the Fed and of the Goldman Sachs team, and Switzerland is now going to have a currency that, as I said, is going to fall with other currencies, and of course being linked to one of the weaker currencies in the world and in Europe, and one of the weakest economic areas in Europe, the euro and the eurozone, is amazing that Switzerland, actually want to follow the euro down into the Mediterranean, which will eventually happen, I'm sure, and the European economy.
What galvanized the people against it? There's usually something that triggers this, because at 80% size of the balance sheet to the GDP, it's only Britain and China are slightly larger, and both of those have some major concerns, and they're clearly Draghi is intending to expand the ECB's balance sheet, which is going to mean more buying of the euros if you're going to maintain that 1.2 peg. This is going to get worse.
Yes, of course it will be. I think what changed it, or what convinced the people who traditionally have had an affinity with gold,
exactly.
But what changed their mind was that every day they were told by the government and by the Swiss National Bank, in the papers, as I said, and on television, that they would lose their jobs.
Okay.
There would be no jobs left, basically, if the peg was not going to hold, and the peg wouldn't hold if this initiative would go through. That's what they were told, and Swiss industry would be totally uncompetitive, and therefore it was absolutely essential for Swiss jobs and the Swiss economy that this was rejected, the gold initiative. Sadly.
So it's fear. It's always the fear card, isn't it?
No, the people, there was clear propaganda. The fact that history told us, the Swiss people, that they had benefited massively from a strong currency, and the fact that throughout history a strong currency has always gone hand in hand with a strong economy. Of course, that was all thrown out of the window, and now it's just the same policies as everybody else, which is just going to lead the world down into the abyss, sadly.
So what are the consequences here for gold? As an outsider, if it had passed, to me, it said in the short term gold would move up. But it says if it's not passed, in the long term, they're going to print more money. Gold's going up anyway. So,
yeah,
one way or the other, you pay me now or pay me later. But it's going to be much more expensive.
From a gold point of view, this was a win-win, and it just now confirms that every major economy, and Switzerland is not a major economy, but it is an important economy, and of course they are, even though they sold a lot of their gold, they still have an important holding. But the fact that now Switzerland joined every other country in the world to print money is going to lead us to the total destruction of paper currencies, as we know, and therefore this will be, it's almost wrong to say beneficial to gold. It will just be detrimental to paper currencies, and gold will just reflect the destruction of paper currencies. As we know, that's all gold does over time. Gold goes just in a straight line, and paper currencies fall rapidly. So it will be, as I said, it will mean a massively high gold price in coming years. But we knew that was going to happen already, but even now Switzerland was the last country to confirm that they will follow the same path, and also they will have to print a lot more money, not for the same reasons as other countries yet, I would say, That is not for the reason that they're running massive deficits, but for the reason that they want to hold the peg. But I fear that the Swiss banking system at some point will require major support of the Swiss National Bank, for the reason that the Swiss banks in total represent about 7 times Swiss GDP, which is one of the biggest leverage situations in the world. And it's on par with Cyprus, which obviously had a banking system that collapsed. So Switzerland is too big for the country, and therefore too big to save. And when we have the next problem within the banking sector, and that will come fairly soon in my view, because 2008 was just a rehearsal, and nothing has been solved since then, and that will come back. And the Swiss banks, having massive balance sheet exposure and having massive derivative exposure also, will probably need major support from the National Bank in coming years, and therefore Switzerland will just print more money relatively than any other country, or continue to print more money, which they have already, but then for different reasons.
So this is not necessarily good for the people, but it's certainly good for these highly leveraged banks. And my observation is they have heavily financed Central and Eastern Europe, and any kind of strengthening there or in the currency is a real problem with the debt.
Yes, that's true. Also, of course, although the official reason for the peg was for Swiss exports, but another reason was that Switzerland and the Swiss banks have extended major loans to Eastern Europe, as you said, in Swiss francs, and a lot of those loans have gone into mortgages in Eastern Europe at low interest rates. And of course, they will never be able to repay them, and therefore, in order to protect or save the Swiss bank from further deterioration of their portfolio with Eastern Europe, this is one of we believe, the major reason for the peg.
You know, with this race to debase around the world that's clearly going on in the developed countries, this was an opportunity for Switzerland to truly be an alternative currency as a store of value, but obviously not part of the plan, and now it's just one of the pack as they are going to race to debase here. It's somewhat disappointing as an outsider looking in. But did we learn anything from it?
Well, I think what we learned is, because I got involved at the very late stages in order to try to support the campaign, and I helped to raise a bit of money for a social media campaign which they hadn't planned. So I mean, I had one foot on the inside, which was interesting, of course. But I think what we learned is that you can't fight the elite. And when the elite has decided that they're going to beat you, they will beat you. I will tell you, there was not one single paper in favor of the initiative, nor anyone in industry, and obviously not television either. So, you know, they managed to, the government and the elite managed to control this very well. And that's what you learn. You can't beat them. I mean, they will be beaten eventually by massive problems in the world, but that's sadly not the way you would like to beat them.
We're seeing currencies all going down, with one glaring exception right now is the tremendous strength of the US dollar. Comments on that and what's behind it?
Yes, you know, when the dollar of the major currencies has been the weakest of them all, so now it's just correcting up a little bit because other currencies are going down. That's all there is. There's no reason, in my view, for the dollar to be strong on a longer term basis. But as we know, all currencies are falling and falling fast. But of course, against each other, they can't fall all at the same time. So now they're taking turns, and we have the yen being tremendously weak, the euro has been weak, the ruble is collapsing, etc. So that's just given the dollar a bit of strength and a lease of life. I think that rise of the dollar is actually more or less finishing, might have finished already now. And I think the dollar will be the one to take the turn of falling faster than the others now very soon. So I don't see the dollar strength lasting at all.
You're clearly, your observation is something I see too. It's like a ring around the rosy. They all take turns in rotating, and so therefore there's no perception of which currency is stronger. There's no flight to perceive safety in there because they're all falling. But at any given time, there's always one that's just a little behind, and or a little stronger, and clearly that's the case. Egon, comments on gold in 2015. What's your outlook now? What do you think are precious metals overall? What do you think is going to happen?
Well, Gordon, the mess in the world is still greater than ever, and you know, there are so many potential catalysts that we've talked about it before, but when the Japanese situation will deteriorate, they are a basket case that they will not survive, or the Japanese economy will not survive. The combination of the debt and the demographics will mean that, you know, they will probably be the first ones to go into hyperinflation, and they are obviously relatively printing now more money than anybody else. So that's the first one. China has, I think they will solve it probably better than others, but they have massive problems in their financial system and then their shadow banking system. And then we know Europe, you know, you look at, I mean, Greece now, I mean, the Greek bonds, I mean, their yields came down to low levels, and now they're up at 10% again. Greek stock market, I think, went down 18% in 3 days. So Greece is now having the second leg down after the massive package to save the world a few years ago. So, and that same will happen to Italy and to Spain, and they're all extremely weak. Nothing has been solved there. France is a major problem area. And of course, in all of that, Germany that has been stronger, they will also start suffering. So, and in my view, I mean, the US is still the biggest bubble of them all because of the massive debt situation and the fact that tax revenues are virtually going sideways, and debt is increasing exponentially, still by $1 trillion a year, and that will increase, in my view, in coming years. So we're looking at a situation, this is nothing new, I mean, I've said this before, but we're looking at a situation when every single country in the world will be under tremendous pressure, and you add to that geopolitical worries around the world. And I mean, you just take the latest now, totally unexpected and unpredicted by most people, which is the oil price coming down to $60 or under $60. I mean, that is a shock not just for the third world or for Russia or for the Middle East, but it's a shock for the US, because that is, if it stays there, it will lead to another subprime disaster, because, you know, the amount of loans and the trillions of dollars that have been issued in order to finance the shale revolution. And of course, we know that it would never last this, because most of these holes are only have a very short life, and the cost is enormous. And you know, the figures I've seen, even at much higher oil prices, is that most people didn't make a profit then, and at these prices, it's a disaster. So if oil stays down here, I mean, that's an added problem for the world as a whole, and for the US in particular, which has added so much debt invested in this area. So I see money printing resuming next year in all countries, when the EU is still not doing it properly because they have political problems. Germany is against it, but it will happen, and the US will need to print a lot of money, in my view, in next year. And I think QE and the US will probably start at the latest in the second quarter again. And then there will be some events, some black swans, which will mean that things will accelerate very fast. And therefore, I see the whole world being under tremendous pressure. I mean, the world has lived above its means now on an accelerating basis for 100 years. It started with the creation of the Fed, 1914, and now, of course, you never know how long it will last, and it has lasted longer than I expected to. I mean, the world or governments around the world and central banks have managed to fool the people and to tell them that printed pieces of paper actually are real wealth. And of course it suited the system, it's suited the powers that be, it suited the bankers. So it has lasted for a lot longer than I thought. But nevertheless, we will come to a point very soon, and I think 2015 will be the start of that, when trouble will start in earnest, and money printing and falling currencies and falling governments and social unrest and an emerging world or emerging countries or a third world which will suffer tremendously. So I think people should really think about the fact that stock markets don't go up forever, property markets don't go up forever, and these conventional views about investments like oil is always good to hold, etc. They got to review all of that and think about how they're going to survive in the next few years. Because if I'm right, governments are going to not be able to look after the people. They're not going to be able to pay the social security benefits that they have been paying around the world. And I mean, Europe has been, of course, leading in that field, and a major part of the economy is social security. And the US is now, is not running far behind now. So social security, pensions, etc., people have to think that that might not cover them in the future, especially not if we get the inflation or hyperinflation that I expect will come with the falling currencies.
Pensions are a major issue. In the United States right now, the state and local is $4.7 trillion underfunded. Federal is $3 trillion, and corporations are probably approaching $1 trillion. So we're within very close to $10 trillion of underfunded pension plans, with 75 million baby boomers retiring at a rate of 10,000 a day. Sounds like a ticking time bomb there to me, Egon. And then, you know, I do a lot of work with that has to be paid for. Money has to come somewhere. And I do a lot of work with Richard Duncan on flows and liquidity flows. And our analysis has said that with taper that there was a liquidity problem of significant proportions looming by first quarter. Now with oil dropping, and if it sustains this way, we're pulling around $316 billion of liquidity out of the OPEC. That was money they were plowing into assets in that flow. And if you take OPEC in total with Russia and the others that are not members, it's close to $500 billion. That's a lot of liquidity. And then they have deficits in these countries that were depending on a higher oil price, which is going to force them to do some selling to maintain budgets and the kinds of subsidies that they have within the country. That's in addition to our liquidity flows. So I agree fully. I think the United States Federal Reserve is probably at the latest Q2, and they won't call, you can be assured they won't call it quantitative easing, but they're going to print. They're going to have to. Sounds like you and I have come out of the same hole on that one.
Yes, sadly. I mean, you know, I hate to say this, but you know, this is just now reaching the end of such a major era in the world and economic history. And you know, history is always written afterwards, and people who are in it now, they don't realize how unreal this situation has been. You can't have record debts and zero interest rates. It just doesn't add up. It is just defeat any economic law there is, or any law of supply and demand. And therefore, people must realize, but they don't, that this is an unreal situation. It's been too easy for the people who have money to make more money, but of course the masses think that they are okay, but they don't realize that they have just benefited from the fact that governments and individuals have gone from zero borrowings in the world 100 years ago to, in my estimate, around 270 trillion total borrowings. And that's what fueled this boom that we've had in the world. It's not real, it's all debt-driven, and that debt, sadly, will have to implode one day. It's not just going to be repaid or disappear. It will implode, and that means asset values will implode. And that also means that, of course, it will create massive unemployment, reduction of production, reduction of world trade, and sadly, misery.
Egon, we have to break now. We're out of time. Any concluding comments you'd like to leave with our listeners?
Yes, I don't think I quite answered your question about the gold price. And of course, I learned one thing. It's absolutely right to hold gold, physical gold, and a bit of silver, hold it outside the banking system. But the thing is, because the trend is clear, the paper money will be destroyed. But there are, of course, corrections on the way there, and we have seen now a correction for 3 years. I think that has ended. I think gold is now turning up again, and I think in 2015 we will see a major rise, and that will continue in following years. I have said many years ago that, I think probably 10, 12 years ago, that gold will reach 10,000 in today's money, and I stand by that now. But we won't have today's money. We will have money which is much, much weaker than we see it today, and therefore gold could be a lot higher. But you're not looking at gold from the point of view of making money. You're looking at gold from the point of view of preserving money and your wealth, and there it plays a very important role.
Egon, one of the consistencies here is when you and I last talked in August. We had a similar conversation that they were going to print, they were going to expand the liquidity, and since then we've had Japan with a what I'll call a Halloween massacre, a massive announcement. We have the ECB on the verge, it looks like, maybe in the next 30 or 60 days, if Draghi gets his way with printing. So probably the next time we have you on, we'll be talking about the new U.S. announcement of more printing.
Right.
So until then, I wish you all the best in 2015. We'll talk to you again.
Thank you very much, Gordon, and happy holidays.
Yeah, you too. Merry Christmas. Bye-bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.